All right, a very good day to all of my fellow live traders, aspiring traders, and of course, the TJM trading community. I would like to welcome you to the very first installment of Btmfx. Simply put, beat the market. Now, guys, I quickly want to explain to you what inspired me to actually come up with this concept. Quite simply, guys, it's my many failures, the never-ending roller coaster of making money and losing it back to the market. Something that actually inspired me to actually go back to the drawing board, do what I call chart research to try and help me find that edge, both psychologically and both technically, on how to better approach the market and how to better improve my trading. And I came across a very powerful concept called the power of strategy backtesting and flashcard recording, something that has actually helped me find the real M's and W's. Now, if you are a market maker, a strategy trader, you understand the concept of M's and W's. And if you are a price action trader or a supply and demand trader, you'll understand M's and W's to be your double tops and your double bottoms, whether they are at the extreme highs or at the extreme low, or whether they're ranging in between. So, guys, what is this BTMFX all about? Basically, guys, what I'm going to be doing on this channel is just sharing with you my detailed chart research, also known as flashcards, or you can call it chart screen grabs or back testing. Basically, what I've done is that I've fused my strategy, right? My strategy being the market maker template with supply and demand, price action, candlestick action, and your patterns, whether it is your trend line, whether it's bullish or whether it's bearish, your rising wedges, your dropping wedges, all of the basic technical patterns. And I actually went back historically on the charts to try and pinpoint how these patterns actually play out, how they actually behave, where they are in terms of being at extreme highs or extreme lows. So I have been doing quite a lot of back testing. Yes, it's taken me years. It can take months for if you're trying it out. But in order for if you truly want to backtest your strategy and actually prove its strength to you, to yourself, and try and find that edge, it can take you months, even up to years to backtest a strategy. So, guys, basically, this concept was inspired by the legendary Steve Morrow. He's the market maker template author or founder. So my trading journey actually started with that strategy. But as the years went by, I've implemented other concepts of trading. Technically speaking, I've been reading quite a lot of books on psychology as well. Something that I'm going to touch on further on this channel. So, guys, please, here's a disclaimer. The material is strictly for educational purposes, right? So please don't consider this as me giving financial advice. It is purely for educational purposes, right? So, guys, like I said, I'm going to be sharing with you guys all of my archives, which is all of my chart research. So, guys, please make sure that you subscribe on the link below so you don't miss out as I give out more videos throughout the week. So, basically, I'll also in the near future would love to touch on live trading sessions, whether it will be through the Zoom platform, and also I'll also share other material on my Telegram page. I will share the link below as well. So, guys, let's just start with the concept, and I'll just share with you 5 examples, right, of flashcard recording. So all of these charts are historically based, right? So I'm going to start with the back testing, which I did in 2020. So all of the examples throughout the episodes are going to be charts of 2020, and then I'm going to share with you archives for the years before that, whether it's 2019 or 2018. I've got all of the archives, so I'll post those archives, or so I'll post those archives on my Telegram page. So guys, let's start without any further ado. Okay, guys, let's just quickly look at the first chart. Now, this is the 15-minute chart, which has the market maker template. So this is the market maker template. Those who are familiar with this will know this very well. So what I've done here is just summarized it in a way that I understand it. So I'm going to try my best to portray it to you and simplify it so that you can understand it quite easily. So basically guys, you have an example. As you can see, or rather, let me just start by explaining to you the moving averages that I have here. The ones that are actually important are these three moving averages: the dark blue, which is the 800 EMA, the white line, the white EMA, which is the 200 EMA, and the sky blue, which is the 50 EMA. So it's all about the crossovers on the 15 template, which give me that precise entry. As you can see, this is a typical W of the 200 EMA. For the sake of this channel, we'll call this the Mayo. All right, guys. So on this example, I did not just take it on the 15-minute. You have to go on to the bigger time frame to try and see where you are in the bigger scale of things, where you are. Have you found the direction bias of the big institutions? Are you following the big guys in terms of trend bias and trend direction? All right, so the example that you've seen on the previous template, right, is exactly this price action which is happening on this template. So what my trading entails that I've got two separate charts which coincide with one another. I've got the H4 right next to the M15. So I always look at the H4 or daily or weekly, even up to monthly, to try and understand where are the prices in the grander scale. Is there a pattern that I recognize? Is it playing in a certain, are the prices playing in a certain direction? Is it behaving? Is it playing out nicely? What are the candlestick formations telling me? So basically, guys, here's an example of what I call a channel which is rising, right? How do I know it's a channel? I had this point 1, which is the arrow, and then the point 2. So after having the point 1 and the point 2, I have a typical support trend line. And there it has been confirmed on point 3, right? And there is your resistance trend line. And I have what we call a rising channel. Basically, it's a combination of higher highs, which are bouncing off this line, and a combination of, beg your pardon, these are higher lows bouncing off your support trend line, and these are your higher highs bouncing off your resistance line. So prices are relatively behaving in a nice upward trend in this channel, all right? And what happened is that on the M15 chart, the buy entry, right? We had our W on the Mayo buy entry, right? Here's the date, 29th of May, and the time was 1700 hours, 2:45, so which is 5:45 in South African time. So that W, this action right here is exactly this action right over here. And you can actually see how prices shot up to test, all right, let me go close, to test this point 2 over here, all right, which is now a resistant point. So on your H4 chart, you can actually see how much prices actually rallied to the upside. So give or take, you're looking at anything between 60 to 110 pips. So I didn't calculate the pips, guys. That's something that you're gonna have to go do to qualify what I'm actually telling you here. So I would advise that whatever I show you on this channel, to go to your own charts and actually see it for yourselves. So this can be actually a good exercise for you to go and back test whatever strategy that you are using, and probably find a common ground with the strategy that I use, and find a common ground with the strategy that you guys are using. So I strive to keep things very simple in my trading. As you can see, these are technicals 101, all right? This area point now has become your major supply zone. And then S1 over here and S/2 here has now become a major demand zone, area of interest for traders who are looking to buy. So let me just zoom this screen. I took another screen grab, zoomed out so you can have a look at a bigger. Yeah, I just compressed the screen and I screen grabbed so you can have an idea of how prices actually played out even further. So guys, we were looking at this point over here. Prices went up to test this resistant point. You can even say this is a fake breakout, but you can see this fake breakout will bounce exactly off this resistance, and this resistant trend line of the higher highs. So this price action area over here shows us the prices were really playing out nicely, probably accumulating to see which direction the market is probably going to push the price. They could have bounced over here and continued up, but you can see instead they broke out of this support trend line over here and went all the way down to our first major support point, which is this point over here. And you see prices then rejecting to break below this point. So that means that after having point 1 and point 2, we have a point of interest, which has now become our demand area, our demand zone. Demand is just another term for support. So I won't get too analytical in terms of trading terminology. I'll try and keep it as simple as possible. So basically, this is what I was saying. Support lines. This is the first support. There on support 2 is now been established that this point now is acting as a support to this point price over here. And there's the confirmation. So this action actually happened in the next chart. Let's have a look at it. So now we're moving on to our second example of a flashcard. There it is, guys. So remember M's and W's of the mail, there has to be a checklist. Certain events need to happen on the chart where you need to tick it off that prices are actually behaving in a certain manner according to your strategy. So my checklist is the first thing that I have to see is a crossover, which we market maker traders call as the death cross, which is the 50 crosses the 200, right? And then prices then come down and then they bounce off the Mayo, which we call that W of the Mayo. So I don't just execute a trade even if this checklist plays out perfectly, because I don't know where I'm sitting on a grander scale of things. So I always have to go back to my bigger time frame. So this W here, guys, that you see here, right? As it's happening on a higher time frame, which is Australia New Zealand H4, it's right over here. Now you can see the movement it took all the way to the top. You're probably looking at something close to 1,000 pips. So this area, it bounced off this blue. Remember previously when we were looking at Australia and New Zealand, let me just quickly go back to you. go back to it, guys. This area right over here, it's been confirmed on this support, right? It failed to break it. It failed to break this major support area or your major support, your major demand zone. And then prices gave us that nice W pattern. Let's go back to it again. There it is, exactly on this area over here, right? So we're still on Australia, New Zealand. So everything checked, and then we can see what happened to the prices after that. They just played out perfectly on this trend line. As you can see, there's your first point, there's the second point, which means that we've got a possible support trend line playing out. There it is, point number 3, which has been confirmed, and then after that it shot straight through the roof. So guys, I hope you're starting to grab the gist of what I'm trying to do in terms of flashcards. I have a specific strategy, right? I use my higher time frames, start from weekly, daily, all the way down to H4 to see where are the prices in a grand scale of things. I try and find your major support zones, major resistance, trend lines that actually playing out. I use the candlesticks formation to see how prices are behaving. So I use quite a combination of things before I can move down to my 15-minute to find that precise trade entry. Sometimes I might find the trade entry on the 15-minute template or the 15-minute chart, but I don't just enter the trade. I first go back and scale up the time frame to see the probability, is it high or low, of me actually taking this trade. So I might have a nice, perfect W pattern, but it simply does not make any sense to buy or sell, even if I see that MOW, because on the H4, it's telling me a complete opposite thing as opposed to what the M15 is telling me. So if I have a confluence of the M15 chart telling me to buy, and then I go all the way up to my daily, weekly, even and H4, and it tells me that no, you are still in the right direction, it's a good buy, then I can execute that trade. Okay, guys, let's have a look at the third one. Again, we are still looking at Australian New Zealand, the Australian dollar to the New Zealand dollar. Remember, guys, these are flashcards taken in the year 2020. So if you were to go to your own chart, backtested using these, remember, guys, I'll share these. I have them archived I'll be posting all of them on my Telegram page in sequence, so you can have a perfect numbering. So you can take my strategy and compare it to yours, guys, and see how it will play out with your strategy. So I'm completely transparent to that. I want to share it with you guys, hopefully connect with anyone who has an idea of what I'm trying to do, and probably we can share trades moving forward. I don't mind. So here's another example, guys, a 5,200 EMA crossing. That's a lock for me. If the 50 crosses the 200, the only thing that I anticipate is for prices to bounce off the Mayo. Whether it's the first hit or the second hit, it doesn't matter. I'm in the trade. But now, before I can actually enter this trade, before I can actually enter this trade, I have to see what's happening on the bigger or grander scale of things, which means that I have to scroll all the way back to your monthly, daily, and H4 chart to see what's happening. If I can try and spot the trend bias, if it's in line with this buy, then the trade has got a high probability of actually working out 50 or above pips. So let's see where we are. Now this is H4, right? So what happened here on 3rd of December, right, which is in 2020, is exactly what happened here, all right? So this is a typical inverse head and shoulder pattern, right? Which also happens to be at the extreme low. So I've got this interesting indicator, which I call the traders dynamic indicator, which is that green circle with another green dot inside it. If it's green, it actually hints that prices are actually at the extreme low. And obviously looking at the TDI as well, I see the RSI is actually broken out of this support band. So prices are quite under pressure now to actually correct and actually reverse, or how can I put it, or it can actually go back and show us a redirection of where the prices are actually going. So like I said, guys, I keep my trading very, very simple. I trade off extreme highs and I trade off extreme lows. In this particular case, this is an extreme low. However, I was expecting prices to break back through this neckline, actually come back, touch the support line or the resistance, which is now support, and give me that perfect head and shoulder inverse pattern. But however, it didn't play out like that. But I got a clue on the 15-minute template when I saw this. All right. When I saw this, it was a clue, it was a good buy. It's in line with what's happening on the bigger time frames for a good buy situation. So in this case, if after back testing, hypothetically speaking, this would have been a good trade to take all the way back to this resistance trend line. What confirms it to be a trend line? You can see you have your point 1 and point 2. That means you've got a trend line set up. In this case, there was no trend line confirmation. Prices just broke through the trend line. So this could have been an excellent trade if it was spotted. So guys, that is another example of back testing and flashcard recording. All right. So what I do is, guys, I then keep all of these records. I keep all of these flashcards in a file, and obviously every day, I look at it, to have it stick into my brain psychologically so that I can train my eye whenever I'm looking for setups to identify these setups as they play out. Right. Remember now, guys, we are looking at something that has already happened. So it's easy to analyze something that has already happened. But the true challenge is to analyze anticipated in live trading time. In other words, it hasn't happened, but you are projecting and anticipating the pattern to play out because now subconsciously you've identified these patterns in your head. You know how they play out. You see the signs, the clues are there. You just need to find them. Okay, guys, let's have a look at the last one. Here's another one, which is the Australian dollar to the American dollar. So guys, like I said, W of the Mayo. So I've just been showing you guys W's of the Mayo. So I'm going to be showing quite a lot of these patterns. So here's another one, right? Prices are bouncing off nicely on that 200 EMA. So a lot of traders are using this indicator, the 200 EMA. So I don't think it's going to be too much of a hassle to understand what it means when I say W of the 200 EMA, which is W of the 200 EMA, or Mayo, as I say. All right, guys. So I identified this on the 15-minute time frame. Remember, you don't just want to just take every bounce of the Mayo as a buy without having gone through your higher time frames to see where you are in the grand scale of things. Right? You see now this M15, right? This blue M15 highlighted over here on the 29th of May is exactly this price action happening over here. Prices are just bouncing off this 200 EMA. You can even see the candlestick formations. They leave this huge wick. I like to call them spikes, as my first strategy that I've learned. Just keep it simple. They are they're just spiking, but refusing to actually give any direction, hinting that it might actually break further down on this 200 EMA. So prices are actually rejecting to break below this 200 EMA. So I view this as a W on the Mayo with multiple spikes. First, you had the first combination in the early hours. This is probably through the Asian session, and this is in the New York session. So, guys, this price action over here, this buy entry point over here, is exactly this buy point entry over here. So it's a perfect trade. It's in line with what's happening on the H4, daily and weekly. It's in line, because now what's happening is that I've got the first point, second point. Yes, I've got a support trend line, or I've got a bullish trend playing out, and on this point 3, the trend, which is bullish, has played out. To me, once I get a third hit on a trend line supported on this point 3, for me, that's enough to tell me that this trend line is actually strong, going on the upside. It's very bullish. And that setup, that W that I just showed you over there, this setup, this pattern over here, is exactly what happened on this H4 pattern over here. And then you can see prices just shot up. They just shot up extremely to the upside. So you're probably looking at a good 200 pips after this action. So hypothetically speaking, again, this trade, if it was identified, if I identified it, remember now I'm doing a flashcard. Like I said, it's easy to identify something that has happened, but when you go to your live trading, it becomes extremely hard, because now you need to project, you need to anticipate this pattern. You remember, you're training our subconscious to identify these patterns. And remember, guys, I always keep it simple. Trend lines, channels which are rising, or channels which are dropping. So I just know all of these patterns, and I've trained myself to actually identify them. While we are on this topic over here, let's look at this a pattern over here on the extreme high, which I noticed. Remember, once prices were at this point, remember now, this hasn't occurred. Let's just for a moment picture this hasn't happened. We have a double top, which didn't play out. And then we have another double top, the second one, which played out. But then we look at our RSI, it broke outside of the this resistant band, which is the blue line. And then it closed inside the band, right? But prices are pushing higher and higher. These are your higher highs. And inside the RSI is actually pushing down. So prices now are under pressure to correct. This is typically what we call a sell divergence. They extended they're pushing the prices by force, but now they need to correct accordingly to the RSI. And you can see what happened. Prices dropped to retest this trend line again. So yeah, guys, as this is my very first episode on this channel, I know I'm still a bit rusty, but as time goes on, I hope to share with you guys great back testing examples, so you can share and actually keep a record of your own, guys. I see that I still have a last one. So you can see, guys, here's another example. 50-200 crossing. There's your first hit on the Mayo. There's your second hit on the Mayo. There's your buy entries. You can actually, this was actually a W, and then they actually confirmed it for the third time. And then you even have a divergence, which is another strong indicator to convince you that it's a buy. But remember, now I said that that's not enough, guys. You need to look at the higher time frames to see where prices are standing on the grander scheme of things, because you always strive to trade in line with these big institutions, right? So you never want to go against the trend. So let's see what's happening there, right? These buy entries, here they are, right? Both of them, here they are, all right? Remember now, this hasn't happened. For a sec, let's just say that this hasn't happened. This is real-time trading. We are at this point. We see that this support is now turned into resistance, and you can see now it's bouncing off the resistance, and you even got a nice big engulfing over here. So there are probably traders who saw this support now become resistance pricing. They probably went short, right? They probably thought that, let me just take it short, and then this point over here will be my point of exit for the trade, where it will be a demand zone. But instead, prices just shot and broke high. Now, we would have seen this according to the strategy, because now we saw this setup, we saw this pattern. The 50 crossed the 200, first hit, second, and the third. So it kind of like gave us warning signs that, hey, the prices won't be going down. There's a high possibility that they might just shoot up. So the 15-minute template helps me quite a lot. This strategy helps me quite a lot in terms of actually picking these precise entries and actually identifying or help me identify where I am on the bigger time frames. I always strive to trade in line with the markets, because I feel that that's the only way we can beat them, is to trade in line with them. You don't want to be on the opposite side of them. All right, guys. So yeah, now when you are on your bigger time frames, always try and find major support, resistance, trend lines, those easy to spot technical patterns. Those are the easiest patterns that you can find. Spot them, mark them down, and when it's time to, when the prices actually move to test them, or to test those major support or resistance zones, that's where I always go to my 15 template to see, do I have this setup, whether it's a W or whether it's an M. So I'm going to be sharing quite a lot of them as well. So yeah, guys, that's it. So in conclusion, guys, if your strategy can provide an entry point and have an exit target point, then you have an edge in the market. So my strategy, it gives me a precise entry and exit on the M15. Now, if my buy, for example, is in line with prices on the daily or on the H4, then it gives me a strong input to actually execute that trade as a buy. So guys, if you scale down from your highest time frame, right, you find the direction bias of the institutional players being your market makers. Where are they pushing the prices? And then from there on, all the way down to your smallest time frame for a precise entry point. Now, if you can combine all of those, then you can have a edge in the market. That means you have your own edge. If you're at a point where you can identify when to buy and when to exit in the market, you've got that edge. Because a lot of traders, even myself, I struggled a lot when I started, and it took me quite some time, years in fact, to actually get to that point where I'm confident to enter a trade and I'm confident to exit. I know this pattern, it always plays out. I've back tested it, I've practiced it 10,000 hours. I have it embedded in my brain. I can actually tell when it's playing out. So the only way you can do the time to understand that, guys, is to do back testing. The only way for you to do back testing is to give it time. It's simple in context. Yes, you just scroll through historical chart data to find your pattern, to prove your strategy. You screen grab, you save it, you compile your own chart records. There are many versions of doing it. You just need to find a version that you can identify to your strategy. Now, guys, remember there's only one way to prove or verify a strategy. And I'm going to emphasize again, is to do countless back testing. Collect those flashcards and train your eye to identify these setups as they play out. So, guys, that's me from LODZ. Thank you very much. Hopefully, I'll be seeing quite a lot of you guys. I'm going to be seeing quite a lot of you guys in the near future. I'll be posting a lot of these back testing examples. So if you can somehow infuse it with your strategy, maybe it will give you that edge. So I'm going to give you guys access to my archived chart data and research. And I'm also going to share with you before and after charts of my live entries that I've taken in the past. And yeah, guys, hopefully as time goes on and my channel increases, I would like to do a live trading session, which is a very simple concept, just to share my screen on Zoom, and then we can actually have an open discussion about live trading. So those are some of the aspects that I'm looking forward to do in the near future. So yeah, guys, you can subscribe. Don't forget to subscribe so that you don't miss out on the notifications. I'll include my Telegram page where you can have access to all of my media files and chart data and videos that you can look at and try maybe incorporate it into your strategy. All right, thanks a lot, guys. I'm out. It's been a pleasure. I'll see you again next time.